of trading in regards to looking at the basics, how the market moves, looking at a little bit of like the supply and demand, technicals, fundamentals, and things like that. Now, what I want to touch on today as well, and what I want to really drill in, especially for people that want to trade and stay in the markets long term. What I mean by that is if you want to sit in the markets for 1,000 days or 2,000 days, like a few years, you need to be aware of fundamentals. Fundamentals that can move the market or when there's a big change. So, for example, things like Brexit or Trump coming into power, the things that are right around the corner from us now that we could foresee. Obviously, no one's got a crystal ball. Nobody can guarantee or tell me exactly where the market's going to go, if that makes sense. Sorry, I do apologize about that. I just had an inbound call. So just to go through the fundamentals with you guys as well, because if you're trading, what you should be looking at every time you log in or every time you open your PC is you should be going through the news. Now, a crucial thing that you should all do is go through the news for the day that you're trading, if that makes sense. Yeah. Now, especially as a day trader, what you'll find is sometimes there may be some news that comes out. Yeah. Now, if you're not aware of it, it can move the market quite dramatically, and you could maybe either be pushed into a position or pushed against you. And really, it has an element of gambling. So, if you're trading, or you should always be aware of the news for that factor. But on top of that, I know Paul has a news trading strategy which he showed you guys, which works quite effectively if you want to trade the news. Personally, myself, my style, I like to not really hold positions through the news unless they're at break even, especially if they're big news events. And also sometimes, like when I first started trading, when I was a junior trader, I ran into a massive issue with on a non-farm payroll. I got slipped 345 pips on a very small account, but it hit me for about £1,800. So sometimes when you try and trade through something like non-farm payrolls or something like that, you do not get the best execution. Sometimes it's liable to be slipped, if that makes sense. So just be wary of that as well. It's something that, especially for new guys, we should definitely make you aware of it, because sometimes you may take a trade and then the market moves against you and it puts you in a position where you haven't taken into account what's going on in the news. Yeah. Now, just to look at the economical data and just give you a little bit of a breakdown for it from the back end. Yeah. What I want to show you here, like, so for example, the next news that's coming out is at 12:30. We've got building permits. Now, it's not really of a high importance, it's of a medium importance. Just to break it down, there's three kind of calendars here, or three kind of. I do apologize if, by the way, we're going through things that maybe some clients have gone through, yeah, but some guys are new, so I just need to bring everyone up to the same stages before we crack through the strategies. Yeah. Now, just to give you a bit more of an idea, there is always a consensus or a previous, if that makes sense. Yeah. A previous is the last result. So it's the last time the data came out, how it came out. Makes sense? Now, a consensus is what they expect it to be like, if that makes sense. Yeah. So it's what they expect. Guys, just bear with me 1 minute, yeah? Just bear with me 1 second. Sorry, I do apologize about that. I just had a client call in. So when you're looking at the consensus, for example, it's what's predicted. Yeah. Now, what you'll find is the consensus and the previous are generally sometimes in line and sometimes not. Yeah. Now, when they're not in line, it generally could be because of some fundamental change. But these type of figures, they affect the currencies um, because it's like the data that comes out. So it makes analysts and people like that, they they look at the figures, if that makes sense, because trading is looking at the figures. So you should always keep an eye on the figures and see what's happening. Now, where you get the big moves is when these figures come out unexpected. So, for example's sake, like for example, this has come out in line, but if this had come out at like 1.8 or 2, it would have been out of expected, and you would have seen a bigger move. Now, in regards to importance, the red ones definitely move the market more. They're the ones you need to be a little bit more wary of. Make sense? Now, the yellow ones, you might not see many big moves off it, even if they come out of line. But if you see any of the high important events come out of line, you will see that there will be a big violent moves. Yeah. Now, flicking through, you should always keep your idea of what's going on in the calendar. Yeah. Like, from my experience, I know that, for example, first Friday of every month, we've got non-farm payrolls. We've got rate decisions from Bank of England on a Thursday. We've got ECB rate decisions as well on a Wednesday, for example. And then you've got like the political events as well, which things may come out, for example, such as Brexit. Yeah. Now, in order to navigate that, you always want to be using something like FX Street, Forex Factory, or our website, for example, where the trader tools are. Yeah. Our latest news feed on our website is up to date. It comes from Duca's Copy the Bank, and it's got minute by minute information, and it breaks down into all things. It's minute by minute. If you start to see big moves on the screen, sometimes just check the up-to-date news feed. Like if you click Forex, you'll see that it's very up to date. Yeah. Okay. And it's very, very good, especially in regards to if the market's moving quite dramatically and it's not from an economical event, it will definitely be on this feed. Yeah. Then on top of that, you've also got things like Bloomberg. Bloomberg, this is very good. Every day, about 10:30, just before the US come into market, they release 5 things you need to know. It's just something that's always good to have in the back of your head because it gives you an idea of sentiment. A lot of the time, some of this stuff will be a lot of nonsense, but sometimes when you see all these things line up together, it shows you that the market's moving fundamentally. So it's like another way to build on you being in a position where, how shall I put it, you're confident with the fundamentals. Now, fundamentals is something that all students need to learn, and they need to take it in. It may take you a little bit of time, but eventually you will get there. Some of the guys that have been trading for a little bit of time, I think you're a little bit more confident with it now. Other guys that are new to it, don't be shy. If you don't understand something, please do ask. But also, if you want to be pointed to the direction where you can find material that you can read in your own time, because really the learning process in regards to the fundamentals has to be done by yourself, because you have to be confident and competent in what you've done. So the only way you're going to do that is by going through the process. One of the main things that it comes to, especially in regards to trading, is you've got to fall in love with the process. Don't fall in love with the results. Don't be emotionally involved if you're winning or if you're losing. Fall in love with the process. Fall in love with placing the orders, because as long as you keep placing the orders, the results will eventually come. Sorry, who was that? Sorry? Was something said? All right, sorry, have you guys got any questions or any queries or anything up until now about the news or economical data or anything like that? No? Okay. All right, great. Fantastic. Now, you've also got like BBC, Bloomberg, CNBC. These things are very good, yeah? But also, don't forget, if you see big moves, do check the up-to-date newsfeed on the website, because something will come out on there, and it's relevant to Forex and commodities and things like that. Yeah, so that's good sometimes. If you see, for example, the best analogy I can give, if you see people running outside your house, rather than running with them, you're better off looking at why they're running, right or wrong. So it's the same sort of concept or idea. If you want to trade in the markets and be professional long term and make good profits, yeah, you need to take into account fundamentals as well as technicals. What you'll find is once you get really good with fundamentals, you'll get free trades off the back of the events, but it's not every day, if that makes sense. And that's another thing. Like, a lot of students drop off the London Open because it doesn't trigger every day, or you get a couple of whipsaws off it. The strategy works. Trade through the losing days, because if you stop at a losing day, you cut yourself short, because it's like you don't know the end results. You need to see the whole process and results, or the data, in order for you to understand, if that makes sense. Yeah. Now, what I'm going to do, okay, I'm going to bring back the charts now. Yeah. Okay. Now, Always look at the news day to day. You should always be looking at the news every time you log on, every time you look. You should be looking at the data, looking at the news, looking at what's going on. Because something could happen dramatically, like Brexit or Trump. If you don't read the news, you won't pick up on it. Like, in regards to fundamentals and what's going forward, I think there could be a possibility where Brexit is overturned or a re-referendum, and the main thing that everybody's looking out for is whether Trump's going to get a second term or not. If Trump gets a second term, you're going to see the market probably extend maybe 30,000, 35. If he doesn't, you're probably going to see a massive correction. So it's a major point, especially at the moment. If Brexit doesn't actually get pushed through in the end of June, you could probably see sterling hitting 150, 160 overnight. But who knows? From my trading experience, one thing I've learned is never try and predict something that you don't know, if that makes sense. Allow the market to tell you where it's going. Don't predict that it's going to go somewhere, if that makes sense. Yeah. Now, looking at the charts, what I want to go through the basis of with you guys as well now is London Open, because a lot of people get it a little bit muddled up. Yeah. Now, the main thing I want to be getting across with London Open and how the orders are placed, you should always be looking at any London Open strategy, yeah, on a 15-minute, 5-day range. Yeah, makes sense, guys? Yeah. The reason why you use 5-day range is it shows you the interval or the range of where the short-term trend is. Yeah. Now, the first thing or the first rule, which I'm not sure if I've drilled into you guys enough yet, is sell high, buy low. Yeah. If you do not sell high and buy low, what you do is you put yourself into a retail category or retail mindset. Yeah. What happens is people see the price running away. When the price runs away, they decide to sell because they feel emotions kick in and they feel as though they're missing out on an opportunity. Make sense? But where you get in here, where the price is running away, what happens is you just provide liquidity for the institutions to get out. Now, what they do is they come to key levels and they push the price through. When the levels push through, what's happening is the retailers are giving liquidity for the banks to get out of their big position. Now, retailers hold short positions where the price is above. Does that make sense? Now, this is a concept that everybody needs to understand. You need to understand how the market moves. All the market does, it's a price that scales through levels looking for orders. As soon as it finds an imbalance in buyers or sellers, it moves. So then the price goes through the levels, then here's an imbalance. There's obviously more buyers that have come in the market. Why? Because the market's done that. Makes sense? Then now the market's gone up to the high, found sell orders, and then it's coming back down to find buy orders, and it's found more buy orders here. Now, this type of position building is how you have to trade when you trade a big account. It's because of margin, and not only because of margin, it's because other people can see where you're placing the orders. So you can't open a 100 million lots at this level because it will just move the market, and when you try to sell out, it will dump. So it's like you can't trade an artificial market. The money has to come from somewhere. Make sense? Yeah. Now, what the London Open is, and the reason why it works, is there's 3 trading sessions. Yeah, you have Asia, Europe, and US. Now, these sessions all overlap. Yeah, so they all in turn make up the 24-hour day or the 24-hour cycle. Now, the reason why the London Open works so well is the Asian market generally has the tightest range. Yeah. Now, some of you guys have been trading it. Some of you guys may be new to it. A couple of things that for you guys that have maybe started to trade it and start get involved with it is you have to take into account where the price is on a 15-minute time frame. If you don't take into account where the price is on a 15-minute, what happens is you don't understand where the orders are and you don't understand the direction of the trend. So to run through this is simplistic. Yeah, 5-day range. Yeah, the 5-day range will allow you to see where the market is. Now, yesterday I went through support and resistance with you guys. It's not the same as supply and demand. It's completely different. You use support and resistance for management of the trades, and you use supply and demand for entry. Make sense? Now, what you need to be wary of in London Open is where the price is in the middle of the range. Now, this analysis works on every single asset class. So, in turn, you should be trading euro dollar, dollar Swiss, cable, euro pound, and dollar yen. That's 5 London Open setups with low risk. Now, the one thing I would say on Mondays, because of the Sunday Tokyo break when the markets reopen, sometimes the ranges are wide. Now, be wary of any range over 20 pips. Personally, if I'm trading euro pound and it's over 15 pips, I won't trade it. If I'm trading cable and it's over 20 pips, I won't trade it. But obviously, it depends on your risk reward. Yeah, I like to have a little bit tighter risk reward, but it works, if that makes sense. Yeah. So now coming back to euro dollar, what you're looking for is a tight range. Yeah, you want to be placing an order above and an order below. Now leave a little bit of gap for the spread, just so that you don't get triggered on false entries where there could be orders sitting directly at the high and the low of the range. Make sense? Now, what the key to the strategy is that you want to be placing trailing stops. If you don't place trailing stops, this strategy will not work. Yeah. Now, when you're going with the trend, if the market's rallying up into these zones here, and you place a buy and a sell, now going counter trend, yeah, if you don't know what this stuff is, if you don't see this part of the screen, because obviously you won't see that when you trade, you will only see the range. Now, where it is here, what a lot of clients get wrong and students get wrong is the fact that counter trend is a buy. So the 1.5 pip trailing stop goes on the buy, because if it continues to go long, it's counter trend. So you want to manage that position aggressively. Where the trend trade is, or 3 to 5 pip trailing stop, is on the sell to help you catch the move. Make sense? Now, when the price is in the middle of the range, any in these areas, it's 1.5 above and below, because you need it to take you out aggressively because it whipsaws. You've got to understand the market is sell and buy orders, buy and sell orders. It's tug of war. So the price comes in, there's sell orders here, there's buy orders here. Then now there's more sell orders that have made the market come down here. Buy orders have come in, price has gone back up. It's just tug of war. When it's in the middle of the range, try not to gamble. These are the levels that get invalidated, and these are the London Opens that whipsaw. Therefore, you trade it with the management of the tightest management. So you just use the 1.5 pip trailing stop. A lot of the time, you will get stopped out for break even. The reason why this strategy is so good is it generally will take you out for 1.5 pips 80% of the time. It won't give you the move 80% of the time, but it will take you out for the spread 80% of the time. Make sense? So that's easy 5 to 10 trades every single morning just off that. If you're doing them at 1 lot, 10 lots, 20 lots. When I was trading in the prop house, I was trading it about 5 to 10 lots. I'll take a entry on 5 lots, and if I got confirmation of a long-term trend, I'll trade 10 lots. And the account size was only about 50k. And you can make a hell of a lot of money out of just trading London Open. And I was only getting a dollar per lot rebate. We're offering 5, so you can see where the value is, if that makes sense. Now, has anyone got any questions? I know there's quite a few guys that have turned up a little bit late. I know we've had some issues with sending out the link. I'm not too sure what's going on with GoToMeeting. Has anyone got any questions or anything like that at this moment in time? Yeah.
Yeah, just the 1.5 pip trailing stop. I mean, that's not gonna. When do you cancel that trailing stop when you have PE? Because you know.
That's a good question. That's a good question, Stephen. Obviously, because you've traded it for a little bit longer, you understand. Yeah. Now, the guys that are a little bit more advanced, Stephen makes a fantastic point there. Where when do you stop the trailing stop, or when do you continue the trailing stop? Yeah. Now, this is spot on. Now, what you have to understand is as soon as the trade gets to break even, I'm not too sure if you lot have noticed, it's a little bit harder if you're not really managing it. If you're not managing it, it's kind of, you won't get to cancel it, but you should try and cancel it as soon as it gets to break even, because what you do then is you find out for free if the market's going to go in your favor or not. Does that make sense, Stephen? Yeah?
Yeah, so what I do is I usually put a 2 pip trailing stop, and then I cancel it once it's at BE. It just depends on how
But
confident I am with the
sometimes,
trade.
if
Yeah.
the reason why you should, a lot of people say, oh, sometimes it misses the move. What it does is it removes the emotion of the trade management, if that makes sense. Now, at that time, a lot of people are getting up and going to work, so only the guys that are going to be sitting in front of it can manage it. But a lot of the guys that go to work, they do find good results, because what you'll see is at the moment the markets aren't really moving that well because there's nothing going on fundamentally, so they're a little bit range bound, so the moves don't follow through. But market conditions change, just like the seasons change, like winters and summer. So what you'll find is eventually you guys, especially some of you guys that have only been with us for a few months, you haven't traded through all types of market conditions. Right now, I would like give you my market conditions as the markets are not as moving as aggressively as they were, let's just say in January. In January, the moves were phenomenal. If that makes sense. And generally, what you find is in the run up to the end of the tax year and things like that, things do quieten down, especially as an overall, as people are like rebalancing their books, if that makes sense. And April, May, June, until August, liquidity is flat, but those months are very April, May, June are generally very, very good trading months. In my career, I've shown the best results in those months generally, if that makes sense. So, does that give you a little bit more of an idea there, Stephen? Or
Yeah, yeah, it does. It does. I mean, I've started using, you prefer trading stops more than Paul possibly does. I do find it useful because at least if I'm not there, then at
yeah,
least it'll trail up in case the whipsaw you.
yeah, it removes the emotion out of trading it. If you're watching it, you can. But like, if you ask me, in my opinion, I'd say you'd as soon as it gets to break even, you cancel it. But sometimes you're not always there to cancel it, if that makes sense. So it's a little bit thing. But if you are there and you are trading it, I would cancel it at break even. You've got an entry where your price is safe, and you're finding out for free if it takes you out that you were wrong, and if not, you know there was orders there. Like if you look, one principle. I know this is going a little bit off topic, and this is the problem with the live room. Sometimes we go off course, but one point that I think everybody should know, especially all students, is that the fact that the market will move as and when it likes. It will take the direction regardless of who you are, what you're going to do. So don't hold an opinion. The guys that hold opinions thinking euro dollar is going to go up, oh, it didn't go up, it did go down, that's ego. That's the major thing that I want to make you guys all aware of, because your egos will not be left in a good way when it comes to the market. Because myself, I've been hurt, and it happens time and time again. So don't necessarily try to predict where the market's going. Always be in a position where you trade the price. Now, for volume, when you're trading volume, this is the point I want you guys to know. Yeah, when you trade for volume, when you're getting in and out, in and out, in and out, you just got to follow the rules. Never try and predict the market. If you follow the rules are there to help you catch the move. Does that make sense? Now, that selling high and buying low is the most crucial thing about that, if that makes sense. If a lot of clients I see that do bad just don't sell and buy in the right place. If you change it round and make sure that you only sell high and buy low, you can in turn make this into a cash generator than a burden. A lot of retail clients that start out sell low and buy high, and I'm sure you guys have seen that as well. Have you guys noticed that or not? What are your results like with the guys that are in the room at the moment? Hello?
You know my results, man.
Yeah, yeah.
Yeah,
No, I was just
up and
saying.
down.
Yeah, yeah. I was just seeing if anybody, well, in regards to like I know it's not just a one-to-one, but in regards to consistency, that comes with practice. Yeah. So practice takes time. It's like something where the longer you sit in the markets, the more confidence you will become. And obviously, at the moment, when you start to see some big fundamental changes as well, it makes it easier to make money out of the markets because it's a little bit more simplistic. You understand where the market's going, if that makes sense. But just to apply it and show you anyway, London Open, it can be applied on any asset. Yeah. Now it does work best, in my personal opinion, on dollar Swiss and euro pound. Yeah. I don't know why, but dollar Swiss for some reason it's just clean. If that makes sense. I don't know if you guys have noticed that, but dollar Swiss is just clean, and euro pound, for example, the ranges are phenomenally tight. You can see here where the market's come out of the 5-day range, so it shows you that it's trending to a certain extent. euro pound, that's easy to trade, but the market doesn't always move as cleanly as that. What you do generally get is something like this, where it's choppy and unpredictable. That itself as a pattern on a longer time frame is quite predictable. It's where the markets are choppy that it's harder to trade. This is enough movement for you to trade. Um, in regards to turning volume, because that's the main thing that we want to think. The thing about turning volume is all about your entry price. Yeah, if you can learn to get in, the rest of it is easy. And getting in is just using supply and demand. Coming back to the difference between supply and demand and support and resistance. Yeah, support and resistance, you should use it as a roadmap for in-trade management. Supply and demand, you should use it as entry points. So for entry, always use supply and demand because they give you the best entries. They allow you to protect your position in order for you to find out if the market's going to move in your favor or not. Make sense? Now, on top of that, what I would say or what I'd look at is the levels where the price comes in and shoots out from. It confirms that the banks have bought there. It confirms the banks have bought there. It confirms they've bought there, for example's sake. There's no supply and demand there, but because it's higher up the screen, but they've definitely bought because there's definitely some kind of movement before it comes back down. Yeah. Now, if you understand that the price just floats from through the levels looking for orders, and when there's an imbalance it moves, it gives you a better understanding of the basics of how the market moves. Now if you make sure that you apply the first principle of sell high and buy low, it puts you in a position where generally you can buy and sell off the high and low of the range. Now what you need to be wary of is when the market's moving fundamentally and it's following through. Obviously euro pound is not a true asset class because the euro and the pound are a little bit contradictory, but I think this is Brexit news that is giving it the little bit of trending fact, if that makes sense. Yeah, but you're not seeing that in cable because the fundamentals in the dollars are different. So all you're seeing on cable is it rally. Look at the rally up from when Brexit actually happened. It's definitely orders. If you don't understand that institutions have been buying here, 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 and here. Now these type of moves, they don't happen all the time, but this movement that you were getting here, it was easy money. You can see now where the market's gone a lot more range bound, the moves aren't as big. We're waiting for that big news to find out where it's going to go. If Brexit comes out and it's all sorted out, you could see sterling retest the highs, but if something comes out with Brexit and it goes all pear-shaped, you can see it come back down into the lows to find more orders. But what's unusual about this longer pattern is that it hasn't come back. It's consistently making higher highs and it goes against the fundamentals. As soon as this stuff sorts the fundamentals out, you're going to see big moves. The market moves a lot when there's fundamentals and technicals line up together, if that makes sense. Yeah. Have you guys got any questions or any queries, for example, for anything that we've gone through with the London? It still needs to be gone through a few more times with you guys. It's like something that needs to be repeated because sometimes you can eliminate some things, but I know a lot of you guys requested the basics of it as well, so I just wanted to run through it. But it's not finished, but I just want to keep an eye. Has anyone got any questions or anything like that at the moment?
No, just a comment. I actually prefer cable for London Open, and I was trading dollar Swiss, but there was a lot of interference down the bottom of the range from the Swiss central banks that used to screw up trades. So it's probably higher up now, so probably look at dollar Swiss again.
That's actually a very good point. Yeah. What you also want to be wary of, yeah, Stephen makes a good point there. Sometimes London Open gets invalidated because of supply and demand levels above and below. So a prime example is, it didn't happen today, but it happened yesterday on Euro Pound, where the London Open range was sitting in a demand zone, and when the price broke down, it found orders and reversed. Now that is what you guys need to be wary of in regards to helps you with trade management, but also you get the best entries like that, if that makes sense. So that's something that, let me just go through that point again because it's very important. Yeah. So when London Open is there, and if you've got orders sitting above or below supply and demand levels, yeah, you can sometimes see, especially when support and resistance match up together, what you'll see is, for example, the price rat. It's not such a good example there because it hasn't actually happened. Where it did happen before it tanked off was yesterday, but the levels have gone. But I'll show you a better example. Let me just flick through and see if I can see any. Just bear with me. this is kind of an example, but it hasn't really gone up. I think if this London Open had broken up into these levels and sold off, that could have been seen as an example. Now, that's something. That's why you close the trade at 10:30, or be wary of it as well, because it invalidates it. Invalidates it. Now, that generally, for you lot to be clear, happens more when it's in the middle of the range. Make sense? That's why we trail the stop 1.5 rather than 3 or 5, because you'll see that sometimes it doesn't give you the 5, but it would have given you the 1.5. Does that make sense? It works better, obviously, where you're doing with maybe like 10 lots. Even if you just beat the spread, you still make $50 in rebate. If that makes sense. So there's an opportunity of doing $500 just of London Open if your account size is large enough. And that's really where a lot of the guys who are busy at work or something like that, you can just do that alone and make money. When we were in the prop houses, we were not really programmed to. One of the prop houses I went to, which I was only there for a little while, those guys were just installing into us just to trade London Open only. The trading floor used to be empty after 3 o'clock because everybody used to come and trade London Open, US Open, and then they used to go home. Other floors that I went, in particular Marex, them guys were a little bit more. They have a philosophy where if you don't trade, it's like you're scared of the market. You need to be able to make money in any market condition. If you call yourself a trader, it's a little bit like you should be able to go out in the rain, snow, sleet, summer. You should be able to go out and make money in any condition. That's what a real trader does. He doesn't look at the market and back off because he thinks there's liquidity issues or it's raining or whatever, for example's sake. You should a true trader, somebody that trades in the market for a long time, will look at the market, analyze it, and see how he's going to take his money out of it. If that makes sense. Now, is there anyone got any more questions or anything else on the London Open? So I think let me just go through that middle part of the range and the whipsaw again. Sometimes what will happen is London Open, for example, has broken down to the downside here. Now, if I can't guarantee it, but obviously because there's a supply level here, I'm sure that day there was a demand zone around in these levels. So you can see the price is broken. That's why you use the 1.5 trailing stop in the open, because sometimes it might not give you 13 pips, but a lot of times it will just reverse, especially if it's at the high and the low. So if it's at the low, this one hasn't braked out, but if this had broken down, I can reassure you that it had a high probability of reversing. That's where the reversal happens. So it happens in the middle of the range and at the high and the low. But you've got to understand, don't forget, don't buy here. A lot of clients think the market is rallying, so they think the breakout's on the buy. It's not, it's on the sell, because the first rule is sell high and buy low. So make sure you guys are selling high and buying low, because if you're not doing that principle, then you won't get the results out of the London Open. What will happen is you'll end up with a lot of trades where you get banged out for losing the range, and you won't understand why. So just to go through that all over again, I know I'm being repetitive, but we've got some new guys in here, and this is the important key factor for you for growing the account, especially of London Open. Yeah, counter trend from the high. On the sell, you put the bigger trailing stop. On the buy, you use the 1.5. Now, on the low, on the you buy, that's the count. That's the trend. You put the bigger 5 pip, 3 to 5 pip. On the sell, you put the 1.5 pip trailing stop. Makes sense? Now, also be wary of supply and demand levels above and below the ranges, because those levels where the market breaks can be triggered. In the middle of the range, it's not, they get invalidated quite a lot, which is what I've talked to you guys about quite a lot. And also do draw support and resistance on a 5-day. If you see that you're moving out of the range or these lines, you know that the market's trending. Start reading the news, seeing what's going on. If you start to see at the moment, like right now, news-wise, there's not much going on. In regards to news. Yeah. Oh yeah, something else I wanted to show you guys. When I was talking about the fundamentals, I forgot to show you. Anybody that doesn't understand, don't be shy. Yeah. Rather than being shy, if you come here, yeah, to education, there's a fantastic bit. Baby Pips is one of the best websites. It's free. They don't charge you £2,000 for the course. They give it to you all for free. But there's this one thing. Anybody that doesn't know about fundamentals or doesn't know what CPI is or non-farm payrolls and doesn't want to ask because they don't want to be put in a position where they feel embarrassed, this is what you want. You want grade 12 in high school. Yeah, this is probably the best way. It breaks it down. It goes through everything. What see rate decisions are, what things affect, what a hawkish statement is, what a dovish statement is, how monetary policy affects it, how interest rate affects it. This is a must go through. If you think that you're not confident with fundamentals, you don't understand fundamentals, make yourself a master of this. It's like 6 or 7 things. It's just a bit of time to. It just takes you a little bit of time to go through it, but it's a must read. It shows you, for example, how to expect it. With the news, it's similar to London Open. Be wary. On the news, what will happen is the news will come out CPI non-farm payrolls. It's weak dollar, but the dollar will be strong on the screen. It's because when the news comes out and you get that initial big move, the move pushes the price into orders. That's why you get the whipsaw. Have you guys ever seen whipsaw off the back of news events where the price goes down and reverse or goes up and comes down? Have you ever seen that, you guys? I'm sure you have. Yeah?
Yep, yep, yep.
Reason why the whipsaw happens is because the news comes out and yes, it's weak dollar. What happens is the price comes running into a level, finds orders, and then reverses. Now all the retailers are selling it thinking it's a weak dollar and it's going up. It's zero sum game. Yeah? Are you guys aware of that? Have you seen that time and time again? Yeah.
Yep.
So that's
Yeah.
something. That's a major thing. A lot of people I've seen. You can teach the smartest kid about the market, but if you teach him the fundamentals and the principles, a lot of times sometimes it can be contradicting, or it needs to be up to the discretion of the driver. If that makes sense. And for that, you need common sense or intelligence. You can't be taught that. It's something that you either need to be on the ball or not. If that makes sense. The one thing I would say as well, even like playing on psychology and mindset and stuff like that, don't trade for the money. Trade because you love trading. The money is a byproduct. It comes as second nature. That's the main thing that we're looking for, especially where we're looking to build the trading floor towards the back end of the year. We want guys that are passionate about the markets, guys that are not necessarily guys that do this for the money. I've seen it time and time again. They don't stay in the industry 5, 10 years, 20 years. Those guys, they're like flyby guys. They come in and they go because they realize that they don't want to put the effort or the work in to become rich. If you want to make money out of the markets, it's an effort. You're playing the biggest game that you can play. It's like playing 11-a-side football. It's not easy. It's not for everybody, but the gains and the results are phenomenal. If that makes sense. So the upside potential. That's why I got into trading, because I thought as though there's nowhere in the world where you could make this kind of money. If that makes sense. Now, London Open, be wary of the whipsaws as well, because it happens in news events and it happens off the back of um, London Opens. If you get an invalidated level, like I can probably suggest that there was a supply level there. Don't forget, there's no indicator there because it's in the middle of the range. This supply and demand template, or the new one, we developed it to make it easy for you as clients to guide yourself through the market. Yeah. Now. We got a little bit of time left, so I just want to touch on support and resistance and supply and demand. Yeah, I know London Open's not done. I've just given like basic things of how to execute the orders. We will be trading it live as well on certain days, and we will be showing you exactly what's going on. So don't worry, we're going to do some live trading sessions. I haven't actually done any live trades yet. I just want to go through a lot of the theory stuff. When you're trading and you're managing the positions, and I'm showing you guys that, you need to know the theory before I do that. So even if I do a few sessions where it just goes through the theory and it's a bit basic, just hold on, because everybody needs to know the foundations. If you don't know the foundations, then it's going to put us in a situation where you will never like, if you don't sell high and buy low, that initial rule, you'll never make money in the markets. You'll be a retailer who loses and loses and loses and doesn't understand why. Especially with juniors, when I see junior guys trying to trade, especially in my time when I've been training guys, what I see is guys do the same thing. It's something to do with the brain, where you program yourself to do the same thing. Now, what we want to do is we want to program you guys to think like professionals, not retailers. Now, one major problem that happens with guys that have learned it from somebody else or looked at the markets from somebody else is their programming wasn't right. Now, to reprogram you is harder. It's something which you have to be broken out of. So a lot of people then want to see proof and evidence and stuff like that, where I don't need to prove to you that it works. I know it works. I make money from it. That's how I know it works. Does that make sense? So sometimes there, once somebody realizes that we know what we're talking about, that's when you perk your ear up and start to take the information in. You can't make this stuff up. You only know it by losing money and making money. That's the only real way where you understand how the market earns. Eventually, some things you need to know is, even if I tell you the rules time and time again, yeah, you will have to take a slap for you to really understand the consequence. Sometimes you have to lose money so that you don't do it again, because otherwise, I can tell anybody how it works, but the problem is, um, I can't be there with you. I can't train your mindset. Like, realistically, trading 60 to 70% mindset, because guys have a string of losses and they give up. They think, oh, this doesn't work. The strategy doesn't work. I don't know what to do. And that's what I just want to work on with you guys with now. I know I said supply and demand, but let's just touch on psychology, because it's a lot more things that you can relate to. When you're trading, you get into a position and the market moves in your favor, and you close the position and it's moved further in your favor. It's the most annoying feeling. It puts you off. It makes you think, it makes you chase your losses. It makes you put yourself in. Now, any trade has three elements: entry, management, and what happens after the fact. Yeah, that after the fact thing is very important, because it can trigger you. Sometimes when you make a trade and it gets you taken out of break even, you can start gambling at higher risk. Or if you take 3 losing trades, always apply these 3 rules for psychology. Yeah, if you have 3 losing trades in a day, stop trading for at least a few hours. Forget about it. Go and do something else. The market's always going to be there. Don't be one of those guys that puts hours and hours and hours and hours of time into the market, blow an account, and then stop doing it. Because if you like, there's a famous thing or analogy where they say that you don't know how to drive a car until you crash it. If you blow an account and leave, it's like getting a car and putting a dent on it and then giving up. When you've got a dent on the car, you feel comfortable now to bang it about a little bit, because that's all it is. It's a vehicle to get you to your destination. You need to treat your trading account as a vehicle to get you to your final destination. This account, this balance, is irrelevant. It's there to be used as your workhorse. You're using it to get in, out, in, out, in, out, in, out, in, out. Now, that is a different mindset to a retail trader who sits there and thinks, how can I make money out of the market by actually calling it? Now, the secret behind it is that you don't have enough money in your account to make the kind of money that you want to say that you were good at trading right before you were lucky, if that makes sense. So you can get lucky in the markets. I've seen people get lucky. I've got lucky a few times as well. But can you do it time and time again without gambling on low risk? That's different. That's different. That's how you get access to investor funds, because you're showing that you're disciplined, you're under control, and that's what I want to work on, psychology. Because some guys, let me tell you something, yeah? Everybody that starts trading, as soon as you put 10k in your account, you take losses straight away. Do you know why? It's because you're still emotionally attached to the money. I've seen it happen to a few clients. We had 2 new clients yesterday that deposited, and they first of all took some losses, and then they had to recoup the losses. Fall in love with the process, not the results. Does that make sense? And also put into comparison what you guys are trying to do. One thing that I learned very quickly as I was growing up is that you need money to make money. Yeah. Now, if you've got reasonably in an account, let's just say, for example, say this is more to the smaller guys. Yeah. If you've got £1,000 or £2,000 on account and you're making that back in rebate in 3 months, that's a bloody good return, with the fact that you're in control of it. You push the button and there was nobody else in control. You did it. Does that make sense? That's the one thing. When we set this up, we focused on execution clients only, because the client is in complete control. You do it. So if we can get you to teach you to fish rather than give you a fish, everybody's going to be on a better playing field. And I've taught loads of juniors to trade. Some have gone off, some have been fired. Who knows what's happened to them? But anybody can be taught to trade. It's what you do after the fact, what your mindset's like, what your psychology is like. The guys that are going to win are always going to win. And those guys are the guys that work on their mindset, work on understanding principles. You can't treat your trading account as something which is like as precious, because it's not. If you have an emotional attachment to the money, you'll never make money out of the markets, because it'll put you in a situation where you feel for the money more than anything. If you fall in love with the win as well as bad as you fall in love with the loss, yeah, what you'll find is that you're falling in love with the result rather than the process. But if you stop and you win, like one thing that happens, and I see this time again, yeah, you win, and it gives you a full sense of security, and you lose a whole load of money. Or otherwise, you just don't understand what you're doing because you don't follow the basic rules, and you just continue to lose money. if that makes sense. Yeah. Now, there's two mindsets that traders end up in, or places where you end up. Because at the end of the day, mindset's a psychological battle between yourself and your mind. Nobody else can be there, but it's programmed in the same way because society makes you think in a certain way. So what you want to do is you want to take yourself out of the common way of thinking, because trading's not for everybody. It's not for the common person. Is if you want an easy job or an easy day job, you're better off going to somewhere like Tesco where you're just paid for your work. This, because of the upside potential with the fact that you're in complete control and the scalability, don't forget, guys, yeah, if you've got 100 or 200k on account, don't forget about the volume that can be made then. If you're doing 100 lots at a time, you're making $500. If you do that 10 times a day, it's 5,000 US, and you can do it off a 100 or 200k account quite comfortably with low risk. I don't know anywhere where you can see that type of return with the fact that you're in control of it. If that makes sense. Anyway, I know the live room is going to be have to wrapped up. I do apologize. I know certain times we do go off in different tangents. Yeah. What we'll do next time when I'm with you guys is I'll run through support and resistance, supply and demand. We'll do some live trading as well, so you can see where we're getting in, how we're getting out, how we're managing the positions, and also I think the main thing you guys will see is how fluent or how automated it is, how we do it like second nature. If we win or we lose, it's irrelevant. It's the process. Have you guys got any questions or any queries for me up until now? I know it's Friday, and I know you guys are probably going to be getting off into the pub or something soon as well. So, any questions, guys? Anything?
No, it's good, mate. Thank you.
All right, perfect. Now, don't worry, it will get a little bit more hands-on in regards to the trading. I will just want to go through the basics of it now and work on your guys' psychology, because psychology is crucial. In my past performance of teaching people, I can teach anyone the theory, but I can't teach you the mindset. If that makes sense. So I can put the ideas out there for you to develop it. It's a little bit like planting the seed and letting it grow. And that's the best way that I find you get the best results, especially with students. So stay tuned. Let's get this going. Obviously, especially if you've been trading for 3 to 6 months or 12 months, you have a phenomenal difference in yourself when you've been trading for 3 years or 4 years, especially when you've been watching the screen every day, because the market only moves in certain ways and certain patterns. So we're going to start to go through some of these things with you as well. If it's moving fundamentally, if it's moving technically. But I've got to wrap it up for now because I've got a coaching call straight off the bat. So if that's all from you guys, thanks for listening. Enjoy the weekend. Happy trading. And we'll be back Monday, Tuesday to continue. Thanks, guys. Bye.
Thanks. Cheers.